All right, let's cut right through the confusion around two terms you see all the time on the Pakistan Stock Exchange: bonus shares and right shares.
Have you ever seen a company announce a 50% rights issue and just kind of scratched your head? Or maybe you've wondered why a stock's price suddenly tanks after they issue bonus shares. Well, if that sounds familiar, you are definitely not alone.
And that's exactly what we're going to do right now. We're going to show you where to find this info, straight from the source, and, more importantly, what it all actually means for you and your investments.
So, where do you even begin? Look, the best info, the real info, always comes straight from the horse's mouth, the official exchange itself. And finding it is actually super easy. Just hop on Google and search for PSX financial announcements. Click that first official link and boom, you're there. That page is basically your mission control for every important company update, including the bonus and right issues we're digging into today. All right, first up, let's tackle the one you see all the time, the bonus share. So what in the world is a bonus share? Honestly, the best way to think about it is as a reward. The company gives its existing shareholders extra shares, completely free of charge. It's like the company is taking its saved-up profits and instead of paying out cash, it's turning them into more stock for you.
Let's make this real. Here's an actual example. A little while back, Service Industries announced a 1-to-1 bonus issue. What did that mean? Simple. For every single share you owned, they gave you another one for free. Pretty cool, right?
But, and this is the part that trips a lot of people up, the company's total value hasn't magically doubled. So, to balance things out, the price of each individual share has to go down. If you had one share worth about 1,180 rupees, after the bonus, you'd have two shares worth around 630 rupees each. So, the total value of your slice of the pie, it stays pretty much the same. You just own more pieces of it now.
Okay, so that's bonus shares, kind of like a freebie. But right shares? Well, that's a whole different ballgame.
A right share isn't a gift. It's an invitation. It's an opportunity. The company is literally giving its current shareholders the right to buy new shares, usually at a sweet discount, before anyone else on the open market can get their hands on them. Check out this announcement from Waves Singer. They announced a 50% rights issue. This meant that for every 2 shares you already had, you got the right to buy 1 brand new share. And get this, the offer price was only 15 rupees.
Now, this is where it gets interesting. On that day, the stock was trading at 22 rupees on the market. But because you're an existing shareholder, you get this exclusive chance to buy more for just 15. That's a pretty significant discount, and it's a powerful incentive for investors to double down on the company.
So you gotta ask, right? If a company needs to raise money, why go through all this trouble? Why not just sell new shares to the public like they normally do?
The answer is always right there in the official announcement PDF. A right issue is a way for the company to raise money directly from the people who already know and believe in it, its current shareholders. And they have to tell you exactly what they're going to use the money for. For Waves, it was to fund their business expansion. It's a really transparent way to fuel future growth.
All right, let's pull all of this together and put a few key tools in your investor toolkit.
Okay, listen up, because this is probably the single most important detail for both of these, the record date. You might also see it called the book closure date. This is the cutoff. To get those bonus shares or to get that invitation for right shares, you absolutely have to own the stock before this date. No exceptions.
So let's do a quick recap. First, always get your info straight from the PSX website. Second, remember that with bonus shares, you get more stock, but the price adjusts, so your total value doesn't really change. Third, right shares are your exclusive opportunity to buy more stock, and you'll probably get a discount. And finally, don't just read the headline, always open that PDF and find out why the company is doing it. So now, the next time one of these announcements pops up on your screen, you won't be confused. You'll know exactly where to look, what it means, and how to think about it. And that, right there, puts you way ahead of the game.